G'day folks, welcome back to the update for natural gas, iron ore, copper and crude oil. It's the 20th of April 2024. Now all markets on this review have gone up since overnight. So let's have a look at the heat map first. And you can still see there still on natural gas, we're bullish on the weekly and daily, although we're bearish on the monthly. US crude is bullish on a longer term, but turned bearish on the daily. High-grade copper is bullish across the board, and iron ore is giving us a mixed signal. And there's some of the other instruments we review as well in other videos. So looking at natural gas first on the monthly, weekly and daily trends. On the monthly, we're still bearish. The CCI 150 is still below the moving average band. It's broken up above that band on the weekly, so it's bullish. And on the daily, likewise, it's bullish. Now notice it's approaching this minor resistance on the daily at 2058. It's actually hit it twice, and it's now making another retrace back to that level possibly. If we go to the daily and hourly charts, first off, zooming out, we've got the stochastic market forecast indicator down here, and it's still in the oversold on the daily and yet to break above the plus 10 level. And on the hourly, it's actually broken up past the 25 level, so making some upswings there. We need to see it break above the 50 level for any really bullish movement. And if I zoom in, the ADX 25 is still also bearish, giving us a bullish signal. Sorry, it's bullish, giving us a bullish signal on the daily. And again, similar to the previous chart I mentioned. And on the hourly, now we did have a few bearish divergence here and there versus higher highs on the price. Broke down, hit our target. And each of these have gone down well below our target level. And more recently, if I zoom in here, you can see there we had another bullish divergence there versus lower lows on the price. Rose hit our target. And I've drawn a Fibonacci range here. And you can see there it's broken up. It resisted a bit at the 61%, then it's finally broken above it and fell back below that 61%. And that's a key area in terms of continuation of the trend. If it continues beyond those highs, we're going to consider this a more bullish signal on the hourly chart. So at the moment, again, in terms of a trading idea, just to understand how this works, I prefer to trade when the weekly and daily at least, so going back to these charts, when the weekly and daily at least a minimum are bullish, I like to take long trades on the smaller time frames, like the 1 hour chart, but it adds even more credibility if the monthly is also bullish, so just be careful. The monthly in this case is still bearish. So again, in this case the weekly and the daily are bullish, so you can see there when the daily is CCI breaking above the moving average band, like in those cases there, you could have taken long trades, and that would have been wise. When the daily is up there as well, you could have taken a long trade starting from that point there when the CCI also breaks higher. Now notice also, just something to be mindful of in terms of bearish divergence, there is also a bearish movement between those peaks and the equivalent on the price chart between those highs there. That's a bearish divergence versus higher highs, and you can see there eventually fell off in line with that CCI keep dropping and now starting to recover again. Technically that's still a bearish divergence up until that high there. Notice the price here is now starting to move in line with the CCI, so there's no real divergence currently in play. That's moving in line with the price, the CCI. Next, we look at US crude, and this is bullish on the monthly. It's bullish on the weekly, but notice it's turning down, approaching the moving average band, so it's starting to get weaker, even though it's bullish signal still. And notice on the daily, it's broken below the moving average band, so it's bearish. So just keep in mind, bullish, almost neutral, and bearish. Looking at the daily chart, first off, zooming out, the stochastic market forecast is above the 50, so still somewhat bullish on the daily, and it's broken down from the overbought territory on the hourly. Now if I zoom in, you can see there it's broken above that resistance we had previously at 83.12, broke slightly above the 61% retracement of that Fibonacci range on the daily, and it's hovering now below that resistance again, gravitating back towards these diagonal ascending trend lines. Zooming in on the hourly chart, again you can see there between that Fibonacci range, it stopped and it retraced back from that 61%. And again, we'd like to see it break higher than that, and once it does that, we'll extend this Fibonacci range to that previous high to then measure where it is. But at the moment, we take it to the previous high, and we measure it above that 61% as a retrace level. You can see there it pulled back and it's landed on this descending diagonal trend line. So again, remember the trends for this are bullish, neutral, and bearish. So just be careful about going long until we see the daily break higher there as well. High grade copper is bullish across the board. Monthly it's bullish. Weekly it's also bullish, and daily it's broken up, fresh breakout above. Now you'll notice a couple of things here. I've drawn a Fibonacci extension. It paused on the previous week at 161%. This looks like it's gone to a 200% extension level. So still pretty strong on copper. And on the daily, if I just zoom in on that one for a moment, you can see that I've drawn that Fibonacci range extension. And again, that's gone up to the 161% level. And that's also gone to the 200% level, and it's broken above that resistance at 43,568. So again, bullish across the board. Now, in terms of the daily and hourly charts, so zooming out first off, they're both above the 50 level. This one's broken above the 75 on the daily, and this one's reached the overbought territory above the 90 on the hourly. And again, I've talked about the daily movement there. It's still bullish. And on the hourly, again, be careful. We've got a bearish divergence here. Lower highs on the CCI versus higher highs on the price. So we expect to see it a bit of a pullback in the interim. Now, if it starts pulling back from where it is there, we're going to draw a Fibonacci target area between that recent low to that high. And our target area, minimum target area, will be that 23 to the 38% level. So just be careful about going long. I'd like to see this play out and complete this divergence before taking any further long trades, even though the monthly, weekly, and daily are bullish. So monthly is not showing the CCI, but we'll assume it's at least neutral. You can see here on the weekly, it's broken up into the neutral phase, and on the daily, it's bullish. So carefully going long, but notice on the daily, it's reached the 50% level. So it's still got a ways to go before getting too confident about bullish movement. We'd like to see it break much higher than a 61% to be more bullish, but at the moment, it's giving us a neutral and a bullish signal on the daily. On the daily and hourly charts, the stochastic market forecast is still below the 50, so somewhat almost bullish, but still potentially bearish. And on the hourly chart, it's broken above the 50 and bullish on the hourly. Now, again, if I zoom out, you can see there in terms of a Fibonacci retracement, it's broken just shy of the 61%. Again, we need to see this break above 61 more confidently to be a lot more bullish on it. But notice the CCI is broken into a bearish signal, so carefully wait until we see a break above the moving average band to take long trades. Considering the daily is bullish, we want to see that break above the moving average bands to be more bullish as well. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.